What exactly is accounting? And why does every business, from a corner shop to a billion-dollar company, rely on accounting every single day? Is accounting just about math and spreadsheets, or there is something much more important behind it? If you have ever wondered how businesses know whether they are growing, falling, or surviving, this video will finally make it clear. In the next few minutes, we are going to answer 4 of the most important beginner questions, such as what is accounting in simple and clear language? Why is accounting so important for businesses and people? How does accounting actually work, from recording to reporting? And who uses accounting? And why should you care? Stick with me and you'll understand it all clearly. Let's begin. So, what's accounting? In simple terms, accounting is the process of recording, organizing, and reporting financial information so people can understand how much money is coming in, how much money is going out, and what's left. But here is the definition most experts agree on. Accounting is the process of identifying, measuring, recording, and communicating financial information about an organization. That sounds a bit formal, so let's break it down. Think of accounting like this. Accounting is the language of business. Just like we use language to understand each other, businesses use accounting to understand how they are doing and to communicate with banks, investors, tax offices, and even the public. Without accounting, business decisions would be like flying blind. No numbers, no direction. Let's take a simple example. Imagine you start a small online business selling handmade phone cases. In your first month, you sell 100 phone cases and you earn $2,000. You spent $800 on materials, $200 on ads, and $100 on shipping. So, how much profit did you make? That's where accounting steps in. Using accounting, you would record your revenue, subtract your expenses, and see that your net profit is $900. Now imagine trying to make decisions like whether to order more materials or run ad without knowing those numbers. That's why accounting is not just about math, it's about making smart decisions. So to recap, accounting tells the story of money, where it came from, where it went, and what's left. It helps individuals and businesses make better final decisions. And it forms the foundation for almost every business, whether it is big or small. Now that we know what accounting is, let's talk about why it actually matters. Accounting is not just something businesses do to follow rules. It's essential for survival, success, and smart decision making. Imagine running a business and not knowing how much money you made, what your biggest expenses were, or if you are even profitable. With accounting, you can see exactly how much cash you have, what your sales are, what you owe to others, and how your business is really doing. Accounting helps answer questions like, can I afford to hire someone new? Should I invest in new equipment? Are we spending too much on marketing? These are not guesses. They are data-driven decisions made possible through accounting. Governments require businesses to pay taxes, prepare financial statements, follow rules like GAAP or IFRS. Without proper accounting, you could face legal trouble, fines, or even lose your business license. Investors, banks, and even your customers want to know, is this business stable, profitable? Clear accounting builds transparency and trust, which is key to success. And it's not just for businesses. Even individuals can use accounting to budget their income, track expenses, plan savings and retirement, avoid debt. Understanding accounting gives you more control over your money and future. So, whether you run a business or just want to manage your money better, accounting is the foundation. Up next, let's dive into the third big question. How does accounting actually work? We'll walk through the basic steps of accounting process. So stay with me. Now that you know what accounting is and why it's important, let's break down the big question. How does accounting actually work? Every accounting system follows a basic process. You can remember it like this. There are 4 key steps in accounting process. The first step is recording the transaction. Every time something happens financially, like a sale, a purchase, or a payment, it's called a transaction. These transactions are recorded in a book or a software called the journal. For example, you sell a product for $500. That sale is recorded in your journal with the date, amount, and details. The second step is classifying or sorting the info. In this step, All these transactions are grouped into categories like sales, expenses, assets, liabilities. This step is called posting to the ledger, and it helps organize the data clearly. When we come to step 3, which is summarizing, now we summarize everything to get the totals. This includes preparing a trial balance, which checks if your numbers are accurate and balanced. This is like reviewing your budget at the end of the month to see where your money went. When we come to the final step of accounting process, which is reporting, in this step, all the data is turned into formal reports called financial statements. These include the income statement, the balance sheet, the cash flow statement. These reports help business owners, managers, and investors understand the company's performance. Record, classify, summarize the report. That's the basic cycle, and we'll explore each part in more detail in upcoming videos. So now you know how accounting actually works in real life. Let's answer one last key question. Who actually uses accounting, and why should you care? You might be wondering, okay, I get what accounting is and how it works, but who actually use all this? The short answer? Almost everyone. Accounting isn't just for accountants. It's used by two main groups of people, internal users and external users. Internal users are people inside the organization like business owners and managers. External users are people outside the organization like investors, lenders, and tax authorities. Both groups use accounting, but for different reasons. Internal users like business owners and managers are the people running the business day to day. They use accounting to track income and expenses, control budgets, make smart decisions, improve performance, and plan for the future. External users like investors, banks, and governments, they don't run the business, but they care about how it's doing. Investors want to know if the company is profitable and worth investing in. Banks and lenders want to know if they will get their money back. Governments and tax authorities need accurate reports to collect taxes and enforce the law. Without proper accounting, you can't attract investors, get loans, or even stay legal. And finally, even if you are not a business owner or investor yet, you are still a user of accounting. In your daily life, accounting helps you budget your money, understand how companies work, save for the future, and make smarter choices with money. It's not just a business skill, it's a life skill. That's it. In the next video, we'll break down the different types of accounting and when each one is used. So if you want to finally understand accounting the easy way, make sure to subscribe and keep watching.